Hello and welcome to the Templum Digital Assets Report. I'm blockchain global news anchor Patricia Wu, along with my co-host, co-founder of Templum, Vince Molinari. We are here at the New York Stock Exchange, and boy, do we have a lot of ground to cover.
We certainly do.
Only the first few weeks of the year, and we've got plenty of headlines, including a government shutdown and volatility in cryptocurrency and the stock market. So Vince, we got to buckle our seatbelts, take a deep breath, get some perspective, look at the predictions for the rest of the year. So, your numero uno prediction, digital assets moving to private and permission chains.
Look, I think this is the one that gets a lot of attention. When we talk about private permission blockchain, a lot different than our public chains, our mining, if you would, or proof of work. We have a real challenge when we look at that from a regulatory perspective. And how do we ensure regulatory compliance when we start to talk about peer-to-peer decentralized systems? We think because of regulation, the permissioning of nodes, the permissioning of actors, whether they're broker-dealers, alternative trading systems, licensed people, the ability for SROs, self-regulatory organizations, to look into those chains, it can't happen on a fully public chain. So we believe the world, particularly as it relates to securities, especially with an emphasis on institutional grade assets and participants, are going to migrate to, we'll call it the year of the permission chain. Right? This is where the adoption is going to come from. This is where the comfort is going to come from for large capital flows around securities that are transacted on a blockchain.
So as we see these capital flows increasing and this space growing, naturally we're going to see these custody solutions evolving and increased legislative activity. Where do you see those two going for the rest of the year?
Thanks for asking. Really important point. And I throw into that bucket regulatory clarity and maybe some other rules that may come in. But when you talk about custody, we're talking about things that are equated to our public markets, nomenclatures of custody that are for public securities. There are no custody requirements for private and unregistered securities. So if we start with that standpoint, this is a different marketplace than public instruments, and this is different than cryptocurrency. So we're talking about your traditional private placement activity that is now in a digitized format, or we'd like to say a smart security format. Well, we have to work with the regulators as I would say market participants and help craft a solution. What does that mean? Once you have custody, how do we determine what good control means in the sense of a digital asset, right? Once that is done, and I think the regulators and both legislators are working towards that end, we're going to be able to unlock massive flows of capital that are sitting on the sideline, that are waiting to come to this marketplace, that are going to help us job create, that are going to help with economic expansion, that's going to help with growth stage companies, and unlocking other capital previously locked on balance sheets for the benefit of those organizations, and in turn also creating new investment opportunities for investors that previously didn't have those opportunities.
Large capital flows, you're teeing me up for number 3 of the top 5 predictions, pathways to liquidity for historically illiquid instruments. This is a big one for Templum.
It's where a lot of our early advocacy came, and how do you permission an alternative trading system that was originally enacted in 1998 pursuant to Reg ATS, to modernize that, to create liquidity for instruments that previously didn't have liquidity or a pathway to liquidity. So that being said, we are permissioned and registered to create liquidity for unregistered securities that are in a digital format. Well, what do we all ask ourselves as investors? What's the exit before we get to the investment, right? So with somewhat the decline in IPOs that we've seen, the lack of M&A activity, to take this vast universe of unregistered securities and be able to put them on a clear pathway to liquidity that could increase over time based upon the performance of the company, with levels of transparency, with audit trails, things that previously didn't exist in this space, we think extraordinarily powerful.
So we've established digital assets are here to stay. So no surprise that regulators are going to be taking an increasingly close look. So let's talk FINRA exams for digital assets.
Well, look, we think there's a pathway that FINRA is going to come in and begin to talk about licensing requirement around digital assets when folks are talking about blockchain, when they're talking about levels of wallets that other participants may be incorporating. Registered representatives, for example, who are public facing. These are kind of specialties, right? You need to know a little bit more than just your traditional security instrument on it, although it is a traditional security, but with different aspects associated with digital. So we think there may be separate exams that FINRA puts forward on this, or at a minimum, encapsulating questions in the testing modules around digital assets, blockchain. So we wouldn't be surprised if we see that coming forward in 2019.
All right, so last but not least, at the top 5 Templum 2019 predictions, my personal favorite. Blockchain not only unlocking value, a game changer for investors, but it can truly make a difference for humanitarian purposes around the world.
I think you're going to see more of a focus. Certainly we've been seeing, I say, greater awareness around the capabilities of blockchain smart contracts for last mile connectivity to those in need. How do you create new instruments? And they might not be securities. It may be mechanisms to move folks from being underbanked or non-banked to a new bankable solution. It may be tied to identity, where identity and receiving aid can be now better monitored. How do you remove corruption from the system where these instruments are immutable? How do you overlay digital assets, smart contracts, perhaps even certain cryptocurrencies globally to align with the Sustainable Development Goals of the United Nations? How do we take this most modern technology to help close the gaps and bring need to folks around the world? And that could be in a for-profit setting or philanthropic. So we think that's going to be a big movement in 2019 as well.
Yeah, I'm looking forward to that. This potential to unlock the ability to change lives globally.
Absolutely.
Our guest this week not only joins us live here at the NYSE for the first time, but we're pleased to announce he's also joining Templum. Bernard van der Lande is Templum's new Chief Issuance Officer, and he's part of Templum's aggressive expansion this year. He's had experience in both the private and public markets and will be pivotal in Templum's capital formation strategies. Welcome, Bernard. Thank you so much for joining us here.
Thank you.
Sitting next to your new boss here, you got to say some nice things. What attracted you to Templum?
Oh, so many things. I think it's probably worth starting with the digital securities space, which in my opinion is a very rational, if not sober, evolution of the traditional financial markets. Particularly in the private markets, blockchain has, I think, the ability to provide enhanced regulatory oversight, whilst also a degree of liquidity that heretofore has been unseen by those private markets. I think Templum, it goes without saying, has from the get-go been at the forefront of thought leadership in the digital securities space and the advocacy of enhanced regulation and so forth for the same. I believe that Templum will continue to be a thought leader and remain tip of the spear as this market evolves.
Well, thanks. And first of all, I'd like to think of Bernard much more as a partner than being his boss. And I think Chris Pilata and I, Chris, as you know, is my co-founder, thrilled to have someone of Bernard's caliber joining the team because he brings so much to the table. Aside from this wonderful title that he has, as a growing, expanding business, there's many things that Bernard will be touching and driving within the organization. So I thought it'd be wonderful, Bernard, if you give us a little bit about your background and setting the stage, and I think it'd be very clear why Templum was so excited about bringing Bernard on board.
My background most recently was with a private asset management platform that takes stakes in boutique investment managers. I was managing director of the real estate vertical, focused on growing our affiliates, business lines, products, and of course capital formation strategies. Prior to that, I was a senior member of CBRE's Global Investment Bank, Capital Advisors, based in New York. And then prior to that, built and led one of CBRE's global capital desks, which focused on cross-border transactions for one of the core business lines. Dabbled in lodging with a boutique advisory firm prior to that, and before that, spent a good bit of time pre-2008 Olympic Games in Asia, focused on investment consulting and regulatory affairs and the like. So I think the common denominator across all of my professional experiences have been in the capital formation and cross-border transactional space, with exposure certainly to the public markets, but a heavy emphasis on the private markets, which I think is the most glaring opportunity for digital securities.
Bernard is quite humble. Has transacted in literally billions of dollars of origination advisory work along real estate, and I think it's important to talk a little bit more about real estate, but it is beyond real estate and the capabilities and the things that Bernard is bringing to Templum. So, love if you share some of your thoughts on real estate specifically as it relates to digital securities, blockchain.
Digital securities, the application of digital securities in the private markets will continue to grow, expand, diversify. At the onset, though, now, I think digital securities have a very relevant place in the strategies of investment managers that are looking to recapitalize the capital stack of direct investments, or to shuffle the existing shareholder base that in traditional terms might be looking for an exit in a conventional 5 or 7 year type hold horizon. I think that the ability to securitize digitally the equity and potentially the debt for these various different assets will allow the asset and investment managers to solidify a fairly permanent capital base, and thereby potentially create an enduring revenue stream from the asset management business and the like. I think that our focus on the near term is in utilizing digital securities for the strategic benefit of existing investment managers and owners, not necessarily to try and achieve some kind of immediate market premium. Said differently, as opposed to having to sell a portfolio of assets or to recapitalize at today's terms those assets with new, potentially expensive equity or expensive debt, utilizing digital securities as a very viable alternative to creating, as I said before, a permanent capital structure.
All right, well, it sounds like you've got your work cut out for you with your new boss and partner.
We're very excited about it, Patricia.
Now, before we go, Vince, let's talk about the headlines coming out of DC this week. A Canadian social media startup, Kik Interactive, intends to challenge the SEC over tokens issued during its initial coin offering. Now, that's according to Kik CEO Ted Livingston, who spoke to the Wall Street Journal. In 2017, Kik raised $98 million by selling 1 trillion tokens. The legal fight stems from regulators accusing Kik of offering unregistered securities to American citizens during that 2017 raise. So the key question here is, are ICO tokens securities? Well, I think we need to ask our expert here, Vince. That's the million or trillion dollar question, right?
Yeah, I think this is one of the questions of 2019. It goes to the core of the Howey test. It goes to the core of the inherent argument, in fact, globally. Are ICOs, as they've been done, securities, utility tokens, consumer tokens? And I dare say this is probably a precedent-setting case here in the U.S. So, as you said, Kik has been challenged by the SEC. They received a Wells notice. A Wells notice is kind of the last step after an investigation by the SEC to put a company or an individual on notice that they're going to proceed with enforcement action. Gives, I think it's a 30-day period of response for the company, in this case Kik, to respond of why they should not have enforcement action against them. What's interesting here, especially the Kik team, and I've never seen it before, has published and made publicly available the Wells notice and their response. So again, kind of new territory, and Mr. Livingston is quite adamant on his position that he's going to fight this and fight it aggressively. So I think there's a number of takeaways here that are really important for the marketplace. This goes to the core, perhaps, of Congressman Davidson and Soto's pending bill, the Token Taxonomy Act, where utility tokens would preempt U.S. securities law. So that's still in the work, and if this wasn't in fact in place already and passed, we wouldn't be having this conversation. On the other side, we have the SEC, who's been quite clear in recent history since the Dow report of what they deem to be a security. So with this Wells notice now, you're going to have lots of dialogue in the marketplace, lots of dialogue with the regulators, lots of dialogue with the legislators of what constitutes a security. And I think KIC's core argument, or one of their core arguments aside from the Howey test, is going back to 1933 and 34 Act that defined securities, gave the SEC the power, also said within that the SEC doesn't govern currencies, and there is no definition of the currency within the 33 or 34 Act. So that position they're taking says that the SEC, this is out of bounds for them. So it's going to be, I'd say, quite a powerful argument if the SEC does choose to go down the final enforcement. And it's a little bit wait and see. I think the statistics say somewhere between 75 and 80% of all Wells notices that go out do result in enforcement action. I think what's also important to point out, these are really Section 5 violations of the security law. They are civil, they don't involve fraud, which I think is a meaningful point to put out there. So it's not inferring that there's bad actors, more inferring that there may have been lack of adherence to U.S. securities law.
Right, and just how wide is that purview? So a legal battle that has broad ramifications. And that does it for this edition of the Templum Digital Assets Report. And if you want more information about Templum, you can check out the social media pages.
We'll see you back here next week.